What's up, everyone, and welcome to the daily macro update for Monday, February 2nd, the first Monday of the new month. Welcome, everyone. Welcome. We're having a bit of a rebound in the markets, but before we get into the actual market reaction here, what I want to get to is this headline that came out this morning for the ISM Manufacturing PMI. This is one of the most important leading economic indicators. The ISM produces the manufacturing as well as services PMI once per month. The services PMI comes out on Wednesday, both of which are very important leading economic indicators. And so specifically with something like manufacturing that's very interest rate sensitive, today we had the largest acceleration since 2022. When you take a look at this chart here, what do you guys notice? Massive, massive upside here. Let me just zoom out here for a second so I can go back. Let's go back 5 years. Yeah, so the last time that this was around this level was around April of 2022. And so manufacturing has pretty much been in a bear market since late 2022. And this is really the largest acceleration in about 3 years. Okay. And, typically when you see something like this, you want to know what in the internal components are driving the manufacturing PMI to do this, right? And so, what you want to do is you want to take a look at all the different components, which you can see right here. We have employment, new orders, prices, all these different things. And what was interesting was new orders, which is another proxy for demand, pretty much was solely responsible for the explosion, right? And this flies in the face of a lot of the people that were talking about recession, even though the market remains in bullish trend. The lights behind me on the bookshelf remain green pretty much throughout this entire crazy volatile couple weeks. The market has remained in a bullish trend. I don't know why people are freaking out. Maybe it's because they were overexposed with dollar or with gold and silver near the extreme tops. But the actual underlying economy is showing a positive growth environment, while at the same time, when you take a look at the prices component, those also remain relatively stable. They're still a little bit higher than the previous couple of years on average, but it's still producing more of a leading Goldilocks type of scenario, right? And so, yeah, I mean, this leads us to believe that, the Fed is going to continue to just reiterate that the economy is strong, inflation is going to continue lower. And the only reason why there's any type of sticky inflation is solely because of tariffs. And so, any type of news as well where tariffs are going to come down, that's going to support the Fed's claim. And yeah, until we get actual hard data showing that, we'll still get these narratives that fluctuate, right? And so, what's interesting is that when you take a look at the headlines here today, seeing that Trump says that the U.S. and India reached a trade deal and will then lower tariffs immediately, that goes back to the Trump always caves, right? The taco trade. And a lot of these different, tariff announcements, they're having less and less of an effect on the markets in terms of tariff announcements. And so, if tariffs are being backed off and we're continuing to get some disinflation, that's going to be really positive for the markets. But at the same time, though, we are getting some leading indicators from market pricing that inflation could remain sticky. And we're finally also getting some readings from the Cleveland Fed inflation nowcast that inflation could jump back up to 2.5 in February from 2.36 in January. So it's still lower than 3%. So it's technically trending in the right direction. Also, too, when you take a look at core PCE, that's continuing to decelerate. So, I think that inflation overall will continue to come down, but getting to that pesky 2% goal is probably not going to happen for quite some time there. But everyone's betting on doom and gloom, and I really think that people are going to get surprised yet again with better than expected actual data. So that's what we're seeing here in terms of the headlines. So very interesting seeing new orders explode to the upside there. Also, too, this week, we talked about it on last night's Sunday Macro Wrap Up. If you guys haven't checked that out, go ahead and go to our YouTube channel and take a look at the Sunday Macro Wrap Up there. That session is typically an hour, but we stream the first 30 minutes for everybody. And, if you want to check the second half of that, where we talk about actionable ideas as well as how to actually position for this type of environment, then you can go to our website, macro-optics.com. We have a couple of offerings there, but the main thing that we're doing right now, if you go to our website, you can check out the 2 memberships, but we're going to continuously do what's called our 6-week macro mastery challenge. This is where you get access to essentially all of our resources as well as our team. And you get access to our different picks as well as our trade alerts. You get access to our trading range model. You've probably seen that on a couple of my videos, but you get access to all those things as well as a strict 6-week guideline to take you from where you're at right now to someone who can be a macro master, as well as have incredible execution skills there. So, in a environment where information is overloading us, we want to make sure that we can cut out all the noise and just execute. And that's what this 6-week macro mastery challenge is all about. So if you want to check that out, go to our website there. Just hit the apply button and it'll take you to this page here where you can book a strategy session with myself or someone from our team. And it's just a 30-minute call where we can just review everything about the challenge as well as just have a general discussion on how we may be able to help you moving forward here. So if you already have a group that is helping you out on all those things, great. If not, go ahead and check that out. But getting back to the calendar here, if we go to the market dashboard on our website, we can take a look at the economic calendar. Let me go ahead and zoom on this real quick. We have jobs data coming out this week. Typically, the first week of the month is all about jobs data, and so we get the JOLTS job openings tomorrow, as well as the ADP non-employment non-farm employment change on Wednesday, and then we get the unemployment rate as well as the government job numbers on Friday. But I did see this headline here today that the jobs report might get delayed because of the partial government shutdown that we're experiencing over the past couple of days here. So yet again, we're getting a government shutdown where it's disrupting a lot of different key market data. We'll probably end up getting it next week if it is delayed. It may not even get delayed. We'll see what happens from here. Well, actually, it says that the BLS will not be releasing the January jobs report. So, yeah, not going to get that on Friday, but we'll probably get that next week or even on February. So we'll get a continued just delay in a lot of this macro data, but really, it doesn't really matter too much on the exact release times, because when you take a look at the prices of the markets here, you can see that we're still in an uptrend, right? When you take a look at the volatility index of the S&P 500 here, it remains well below 20. Huge drop off today. I mean, there was a great buying opportunity. Hopefully, you guys were able to take advantage of that in select assets. I'm not talking about things like Bitcoin or silver, which continue to go down, but we continue to see different bounces in things like copper miners, as well as with small caps. Nice little pop off the low end of the trading range there. Good selling opportunity here with 5 minutes left in the market. We had a couple of earnings announcements today. Disney reported this morning. Huge drop, even though it was technically a beat. I believe they're replacing their CEO or something like that. But interesting to see that there. Disney is in a bearish trend currently. But I think later on today we have Palantir. So, yep, they are announcing earnings after the close here at some point. Palantir currently is in bearish trend, so my team and I weren't really doing anything with this today here, but we also get Google earnings and Amazon earnings later on this week, I believe on Wednesday and Thursday, respectively. So those are the two big earnings this week, both of which Google and Amazon are both in bullish trend, and so we'll be interested to see how those two play out there. Um, Yeah, I mean, that's really just it. I was buying a little bit of Nvidia today, staples, industrials, tech, all having bounces. Take a look at financials. Could we be seeing a rebound in financials? We'll have to see about that. But yeah, really, there's despite the sell-off in precious metals, specifically silver and gold, there was a bunch of other buying opportunities with other things, right? Because you still have bearish bond volatility, right? So credit markets aren't signaling any type of risk or any type of blowing up in the credit markets. The VIX remains below 20. You have credit spreads rising a little bit, but still remaining relatively low historically. 5-year break evens continuing a huge rebound, which is an early signal of potential stickiness in inflation that might show up around like Q2, something like that. But yeah, flattening of the yield curve with the short end rising faster than the long end. All interesting things here. But the steepening continues. Growth is surprising people, and yeah, I mean, the moral of the story is that growth is accelerating. Inflation is ticking downward, although maybe a lot slower than some people might hope for, but good enough for the Fed. And I would not bet against this market. I would not be bearish right now at all. But for those people who are paying attention to this channel, you guys did not fall into that trap here. And so hopefully you were getting into some good dip buying there. But with that, let's go ahead and get into some questions here. Appreciate everyone for joining. I know over the past couple weeks here, I've been traveling as well as experiencing some sickness here. So I appreciate everyone's patience, but we are back to regularly scheduled programming. Let's see here. Crypto going back up? No. Crypto remains in bearish trend. Yeah, Bitcoin, if we just look at total, let's see. Do I even have it on here? Yeah, total crypto market cap. I mean, geez, this went from 4.25 trillion to 2.6 trillion. So yeah, $2 trillion in market cap wiped out over the past, few months here. That's not bullish. So for those people who are trying to like pick the bottom in crypto, there's no point in doing that. You're wasting your time. There's so many other opportunities right now. It's ridiculous. But yeah, Bitcoin's trading currently at 77,000 ranges. I mean, it's near the loan of the trading range, so I wouldn't be shorting it here. But I also wouldn't be buying it here either. There's so much better things to own right now. So if you're bag holding this, you need to get better. All right. You mentioned on Twitter that the new Fed chair is dovish. Can you explain? Because there are multiple videos of him saying he is anti-QE. Will he change his tune once being appointed? Yeah, of course. Why do you think Trump hired him? Just because he said stuff in the past, you think he's going to go in there and be like, "Oh yeah, we're gonna hike rates"? No, this is just a overblown market reaction. And yeah, I mean, as soon as he gets in there, like all politicians, what are they going to do? They're just going to play to the status quo, you know. So, yeah, I mean, all the things that are replaying past clips of him, like you don't know what he's going to say in the future here, you know, and he's going to fall in line because that's what happens. The yield curve is saying that we are in fiscal dominance, meaning that the government is in control with telling the Fed what to do. And that's not going to end just because there's a new Fed chair, even if he said all these other things in the past. So, yeah, I would just fade all the fear going on, fade it all. Why fade the fear? Because we're just not seeing we're not seeing any type of confirmation of this fear in the credit markets and the bond market and the currency markets. Like we're just not seeing it confirmed in any other market. The only thing is in Bitcoin and equities, which is like things that everyone owns and that they're irresponsibly long. Who was it that said that? Was it Raoul Pal over at what's his thing? You guys know who I'm talking about? That guy? He was the one who was famous for saying right before Luna crashed, he was like, "I'm irresponsibly long Luna." That was his like big tweet that blew up before Luna actually blew up and went to zero. So you got to watch out for these gurus, man. You got to watch out for them. They are only there to sell you whatever they're selling, right? So, you know, it was crazy during 2021, the amount of like DMs, like myself and some of my other friends who create, financial content, all the people who are, sending us or willing to send us, thousands of dollars. I never accepted any of it. But they're sending people were getting paid a lot of money to like show these crap coins that ended up going to zero. They're probably going to have to face some legal repercussions because of that. But yeah, I mean, you just got to really be aware of people's intentions online there who are showing this type of crap that seem to be too good to be true, right? That's why on this channel you'll never hear me saying you got to buy this stock because of this narrative. You have to buy this crypto because of this narrative. Everything is math based from what we talk about, data based. And the only reason why I would buy something is because our own model is telling us to do that. It's not because of any type of news headline or narrative or anything like that, right? That's the way it should be. Anyways, let's get to some questions here. Sass Neo says, "Hey, there have been talks." Oh man, that first sentence there. There have been talks. Is that math? No, it's not, but we'll continue. There's been talk that once the 30-year bond yield is greater than 5%, the Feds will no longer have control and potentially trigger something catastrophic. Thoughts? I don't know, dude. Um, Look, you're going to hear a lot of talks, but if the Fed or if the government loses control of the long end of the curve, will we enter some type of 1970s style, um, bond vigilante type of environment? Probably. When we get there, we get there, but I'm not going to speculate or make any type of positioning in my portfolio based off of there have been talks, right? Because that's not a process. Fade all that stuff. Fade it, fade it, fade it. Hey, Johnny, can you explain again how the correlations indicator works? Does it work for different sectors too? For example, real estate sector is lagging usually. Can we see that in the correlations? Um, yeah, we'll get to that in a second here. Do you offer any daily output for current market trends or bullish sectors? Yes, every single day in our macro investing community. I would highly recommend going to our website and checking us out. But yeah, getting into this one question from a member here. So, um, yeah, so one of our members only indicators is our um, correlate our 30-day rolling correlations matrix indicator, which I'll bring up here. Let's go ahead and click on this one. All right, here we go. All right, can you guys see this here? So this is a 30-day rolling correlation versus versus the dollar, right? So you have these different assets right here. Let me actually put my screen down a little bit so you can see better. Excuse me. But so you have the Mag 7 ETF, MAGS, you have gold, oil, the 10-year US government bond yield, commodities, the S&P 500, and Bitcoin. And all of these are showing the 30-day rolling correlation versus the dollar, right? And then you have today's correlations, and then you have the snapshot 1 week ago, 1 month ago, 2 months ago, 3 months ago, just to see the color dynamic through time, right? And what you can see here is there's a lot of things that are oppositely correlated to the dollar. The dollar remains in a bearish trend right now. And so things that have the most opposite correlation, you probably want to be buying dips in once you get the dollar to the top end of the trading range, so long as it maintains its bearish trend. That's a little introduction to this indicator. But the question was, can you explain, or does it work for different sectors too? For example, real estate. Yeah, I mean, so the background chart will always be the chart that you're viewing this as, right? So let's say instead of the dollar, I wanted to compare this to the S&P 500, right? So I would click the S&P, and then the 30-day rolling correlations would readjust, but instead of versus the dollar, now it's versus a bullish S&P 500. And now it'll tell you which one of these is the most positively correlated or most negatively correlated, right? Interesting seeing Bitcoin being essentially neutral versus the SPY or the S&P. SPX, this is one because it is the SPX. But for example, with what you were saying there, Fotis, with the real estate sector, what you can do is you could either use XLRE as the background, right? So this is these different assets versus health or versus real estate. Whereas right now, interestingly, the Mag 7 stocks are very negatively correlated, whereas a lot of these other trends are near positive correlation to XLRE. But let's say you wanted to keep it as the dollar. So let's go DXY. And then you wanted to change one of these different things. Let's go to the settings. And instead of mags, we'll do XLRE. There you go. So XLRE versus the dollar is actually neutral, interestingly. But this is on a 30-day rolling correlation basis. Let's zoom in a little bit on a 15-day just to see more of like an immediate term reaction. You get a little bit of a different tone here. So versus the dollar, you do have real estate as well as Bitcoin both positively correlated to the dollar. So now that at the same time with, let's go back to, all right, so seeing that XLRE is currently in a neutral trend, with it also being more positively correlated to the dollar on a more immediate term 15-day rolling correlation basis, this isn't screaming that I want to be buying this, right? And this is part of the puzzle piece that our team looks at when looking at different things, whether to buy or sell them, right? You want to have an idea of which of the major assets, right? Dollar, S&P 500, Bitcoin, gold, all those different, if they're in a bullish or bearish trend, based on that, as well as what the yield curve is signaling, that gives you your, macro, which typical macro regime you're in, as well as which one you could be most likely heading towards from here. And then given that, you want to look at the trading ranges, volume, volatility. You want to look at the different correlations between all these things. And from there, you can determine which one of those is the best thing to own given the macro environment, right? And so these are things that my team and I talk about every single day in our community there. And, it's something where even though what I just described, that process seems like, a long, drawn out, complicated thing. It's really not, right? It's just like practicing anything. It becomes part of your thinking and part of your process. And it's something where it kind of becomes second nature after a while. And that's why we do our 6-week challenge in order to help people actually learn this, right? And so we still have the cohort open for the next 11 days. If you want to secure your spot, just go to the link below. But yeah, good question. Let me know if that answered it. I know I kind of went on some tangents there. Bitcoin at 15K. Do you buy even if it's still in bearish trend? Nope. Even if Bitcoin goes to 15K, which I don't think it will, but let's say that did happen. If it remains in bearish trend, then I'm not buying it. If at 15K we're in a bullish trend at that point, yeah, I'll buy it. The S&P 500 breaking down against gold is a sign that we can see huge downtrend in the market, right? What do you mean? SPX breaking down against gold? If anything, it's been rising versus versus gold. So I'm not sure what you mean there. Let's take a look. Yeah, SPX versus gold has had a pretty crazy bounce up. It has been breaking down though. It has been in a bearish trend. But yeah, ever since gold has been having a crazy correction, this ratio has actually been accelerating, right? But the S&P 500 itself remains in bullish trend, and that's what determines if something is going to be going bearish or back to bullish. And right now, I mean, it's continuing to make a series of higher highs and higher lows. So just looking at structure, when looking at volume, um, when looking at the other indicators that we like to look at, I would not be shorting this market at all. There might be times where you get some short-term moves, kind of like what we saw um, in the middle of December there, and then once again at the end of December into the new year, and then we saw that correction a couple weeks ago, and then yeah, so you're going to get times where you can find some opportunities here, but the real question that you need to ask yourself is, what were your thoughts? What was going through your brain during these times right here? Were you telling yourself, "Oh my gosh, I need to sell everything. Market's exploding. Sell everything, get out." Or were you saying, "Nope, the process says it's bullish trend. When something is bullish and at the low of the trading range on lower volume and decelerating volatility, that means to buy it." Which one of those two things were you thinking? If it's the former instead of the latter, again, I would highly recommend you join a macro investing community. Lawrence, thank you so much. We love having you part of the partnership circle there. Photo says it did answer it. So with your explanation, it is possible to see how lagging a sector is reacting. Yeah, you really just have to play around with the different inputs as well. Bought some copper today. Nice, nice. Yeah, copper is maintaining its bullish trend here. Yeah, so I mean, interesting moves today. You have some emerging markets doing pretty well. I mean, India had a huge bounce on that trade announcement, right? That was kind of the big one today. Ethereum and Bitcoin continue to do the worst. Gold had a pretty decent chop today as well. I still own gold, but I wasn't panic selling any of this. Well, I was selling some of it into the strength here, but I still own some. So I mean, wish I sold a little bit more around this area, but doesn't matter. I mean, we were buying it all around, in November. I mean, this has been bullish in our model pretty much since, I don't know. I think it went bullish in our model around 2023 in November, and it's never been removed because it's never gone bearish. So even right now, gold is not in a bearish trend despite the huge swing. Let's see what else here. Transportation. What the heck? XTN. Look at this. Bang. As well as Costco. We were buying some of this on the dip. Right down to the low of the trading range. See that? That's what you want to see. Oops. If I want to have better knowledge in macro, can I still join your course? My main asset class is Forex. Well, it's not a course, right? We do offer, some training modules that are in there, but it's more of a investing community, the actual like video modules it's a very small portion of what we actually do in there, right? The big value add in the community is really the daily call outs that we produce in there, as well as the live market chat, but yeah, I mean, if you're in Forex, I mean, we talk about currencies all the time. In fact, the currency markets is the largest market aside from the bond market. And, the first thing that you want to do is you want to make sure that you're paying attention to what the dollar is doing, as well as, things like what the euro is doing, what, Japan is doing. All those different currencies matter a lot. So, yeah, even if you just trade Forex, you can certainly find some value in this. But we go and trade anything anything that's tradable, So we don't just limit ourselves to just that. Would you get value in joining a community if you're day trading? Yeah, I mean, if you're a day trader, if you're a options trader who is just hunting, um, you know, earning surprises all day, or if you're just trying to like scalp the S&P 500, or or you're a crypto degen, or if you're just a long-term holder, the macro affects everything. And, if you're incorporating macro into whatever process you like to do, that's what's going to, give you that edge, you know. It's all three things, right? It's technical analysis, fundamental analysis, and macro analysis that you need to incorporate into your investing thesis if you want to survive in this post-pandemic era where the average inflation rate is way higher than post 2008 and the average interest rate is much higher, right? So in a higher than average interest rate, higher than average inflation rate environment, the macro is coming back into the forefront of what investors need to be thinking about, right? Because pretty much during 2008 to COVID to 2020, with inflation at very low levels historically, as well as with interest rates near zero, you know, you could still use macro a lot, but it wasn't as important as valuation because you wanted to see which stocks were getting the most juice. Whereas nowadays, you need to start thinking about that as well. It's not as straightforward, cut and dry. But good question. Good question, though. Can you look at BY? Let me see. BYD. Not sure what this is, but definitely bearish trend. Doesn't look like it's available in the United States. Whatever this is. But all right, well, we're going to go ahead and wrap it up there, everyone. I appreciate everyone for joining. Again, we are back to the regularly scheduled live streams every single day, Sunday through Thursday. Monday through Thursday are from 3:45 p.m. until whenever we want to stop. Typically, 20 minutes, 15 minutes. We went over a little bit today, and then on Sundays it's 8 p.m. for the Sunday macro wrap up. So, good to be back here with all of you. And looking forward to a great week here. But I appreciate everyone for joining. Good luck out there, and we will catch you in tomorrow's daily macro update. Bye, everyone.